What's the avenue you found to be the best when it comes to having investors or raising capital or like what has been your experience, I guess you could say?
Well, in a construction company, which, I mean, obviously you talk to a lot of construction companies, roofers, pest control companies, solar companies. Oftentimes, our CFO has a huge background in construction, has managed, $1 billion plus, home improvement company. And he tells us, you find out what you made in a construction company when you sell some or all of your company or you close it down. And so you've got a lot of solar companies in the situation right now where, let's just say an example, right? Let's say they made $5 million last year. They pay taxes this year on $5 million, but they probably paid themselves a few $100,000 each. And they're thinking they're going to take that money out soon, but they're not, because they're going to have $1 million more in equipment. They're going to have $3 million more in accounts receivable. Their business is going to grow. And as long as your business is growing, your cash flow is becoming more and more strained. And so there's actually less typically available cash in a business that's growing. And the faster you're growing, the less cash is available because there's more operating capital required on a daily basis to sustain that growth. And so what happens is if you were to shut down that company today, and then they have like $7 million in accounts receivable and all these jobs coming in and they're not paying, new marketing, new commissions, all these things, boom, all of a sudden they've made $8 or $9 million, right? But they don't want to close their company down. So then if they take on an investor, that's a way they can get paid. And they don't have to sell all their company. The two most common structures out there in the market are through private equity. One's going to be a minority recapitalization. The other is going to be a majority recapitalization. The difference being in one scenario, you're selling more than 50% of your company. And what happens a lot of time in this scenario, what we discovered for ourselves, in 2018, we took a look at our business in 2018. We said, okay, we're one of the fastest growing companies in North America. We for 5 years in a row, we're not really paying ourselves a whole lot. And we're making a lot of money, but we're running out of cash. And if we had more cash, we could grow.
Yeah.
And we started even having to pick and choose the business that we want. We figured like, okay, this marketplace, we can clear 35 cents a watt. This marketplace, we could clear 60 cents a watt. And it was like, we only had so much cash to deploy. And so we had to start picking and choosing, where do we grow? What do we do?
Right. I mean, you're spending money for where you're at now, where you're going to be in 3 to 6 months, but you're collecting money from where you're at 90 days ago. And if you're growing really fast, and that gap becomes wider and wider of what your accounts receivable actually is to what you need to spend to keep on your growth rate. And so you can become cash restrained really quickly. And we certainly went through that a couple different times. And then either had to scale back marketing or fix things over here to make sure we could bridge that gap while, especially in the earlier years before we really had any kind of access to capital. We started our company the same way everyone does, just self-funded. I mean, we, all the money that my wife and I had, and then we mortgaged our house again, and all those things. It was just the real traditional, went all in to get this company going. You need 2-3 years of tax returns, and then the first 3-year mark is really the hardest to get through because you're self-funding pretty much everything. And but once you make it past that point, then you can go to the bank. Then they'll really take you seriously, look at those financials, and then after that point of getting access to capital, then we were able to not be so tight. But those first 3 years it's like, yeah, the books look great, but again, we're collecting AR from several months ago, and we're growing month over month, and it was just
yeah, it costs money to grow, right?
It costs money to grow.
Yeah.
So lines of credit are a great simple way that people can take on capital. There's typically a 60 to 90 day process to securing a line of credit.
And generally after 2 or 3 years of financials.
Like the bank, I went to the bank and I was like, hey, can I get a line of credit? And they're like, no.
Yeah, you really
like, here's 20 grand. I'm like, I don't need 20 grand.
Yeah. So we're like, okay.
Yeah, like, what am I going to do with 20 grand?
Yeah.
I would tell most people probably don't really want to take on money though in their first couple of years. Money's a catalyst. So if you're watching like Fast and Furious, it's that nitrous that hits your tank. It's going to accelerate you, but you might not want to grow really fast yet. And it's going to send you down the road you're going on faster. I know for us, there's been a couple times where we didn't get the money that we wanted, and it forced us to get really lean. And we found areas that we were losing money in that we shouldn't be losing money in. We found areas that we should be making more money in.
Yeah, because if you put nitrous on that path, it just means you lose a lot more money than
You lose a lot more money.
Yeah.
Or like in episode 1, right, when Paul, like he throws the nitrous too early, right, and so he doesn't win, right? He just and that you see that a lot where someone wants to grow really fast, and so they go get a partner or they go get money. But the reality is they really haven't become an expert in their field yet. They really haven't owned what they're doing yet. They really don't understand the true cost of being in business, right? There's a true cost of being in your business, and until you know that, money's not going to help you. So, getting an angel investor can help, but a lot of times, you get angel investors, friends and family will give you money because a bank won't give you money. And typically those people burn through that capital and, they put a strain on that relationship, and because they weren't ready for money. I mean, there's a reason why banks rarely go out of business. And it's because they only loan money to people who are in a position to pay them back.
Yeah.
Right. And so, friends, we loan money all the time to people that don't pay us back. And so angel investing could be a great way to expand your business, but it could also handicap you, and it could give you extra money to spend when really you should be trying to figure out how to not spend the money.
Yeah. How to bootstrap things better.
Growing down in the private equity route, I mean, I would just say that, there's almost as much capital in private equity as there is investing in the stock market. I mean, there's hundreds and hundreds of billions of dollars from small firms even that are looking for companies to grow. And what we learned when we went through this process in 2018 and 19 is, as entrepreneurs, we were wondering, well, is someone going to take control of our company? Like, are they going to make all the decisions? Like, are they going to fire us or things like that? But that's not what they want. They're looking for people who are running a good business, who are profitable, and who have done the best with what they can and literally need money to grow. And so they want to step in with contacts. They want to step in with capital. And they're going to take part of your company so that when they give you money to grow, they benefit with you. And, a lot of the companies that we met with, some of them are going to invest in you and help you grow and then help you sell that company in 3 to 4 years. And some of them are going to be with you for 5 years, 10 years, 15 years, and they're just going to help you keep growing your company. And so there's a lot of money out there. There's a tremendous amount of capital available in this marketplace when you learn how to access it. And even the process of accessing it gets your company in better shape. So you reach out to them, you take a meeting with them, and they'll tell you, oh, you're not ready. And then they tell you how to get ready. And then
it's like going on a date with a chick and she's like, you're not ready for me. Like, you're like, oh,
well, what do I got to do?
Yeah. What do I got to do? Like, shoot, I got to, you're like,
freak. Your haircut, and you just go, you get your marching orders and you go back to work.
Exactly. I love that.
But it's exactly like that. Yeah. I mean, honestly, going and pursuing, you don't know what you don't know. So pursuing capital and having multiple resources telling you why they wouldn't give you money is actually a great way to find out, what do I have to do to be in a position at some point in time in the future to take on an investor, to take on growth capital, right, to expand my business. It's a great way to learn, because they definitely don't teach that in college. There's not a lot of entrepreneur programs that teach that process. It's one of those things you really learn by doing it.
And I think a lot of people, they're very scared to do that. You know what I mean? Like for me, it's an unknown. It's where do I start? Like, where it's like, I remember my first time I bought a house, it was like, how do I buy a house? And now I'm like, you literally call a realtor and tell them to pick you a house, and you go to a bank and you get a loan. You know what I mean? I was like, it's not much more than that. Like, and I think that I overcomplicated. Now it's like, I have people like, how do I start in real estate? You start. Same thing, I'm assuming, right? Is you just start calling private equity companies and start building relationships. And
if you make the Inc. 500 list a few years in a row, companies are going to start calling you, and all you have to do is really make time. So you're going to get solicited over the phone. You're going to get solicited in the email from firms that, hey, we're interested in investing in companies in your area, and there's these things that come in all the time, and we just don't make time for them. And so sometimes, one of the habits I try to do as an entrepreneur is I try to spend, at least a couple hours a week in an area that I don't know anything about, right? And sometimes it's just chasing an email thread or Googling a topic. You can just Google the topic. You can Google the topic today, majority recapitalization, and you can start that process, and you start like just, chasing that rabbit hole, basically. Because that's how a lot of entrepreneurs learned anything, right? That's how a lot of us learned something. We got thrown into something, and we figured it out.
I love that. And with how much information's on Google and at our fingertips, like I'm sure it's.
Oh, it's all there.
I'm sure it's all there.
You think of it, you can learn quite a bit really quick.
Yeah.